Hey, this is Matt from InvestiQuant. Today is Wednesday, June 16, 2021. Today is the FOMC announcement day, and we just got the news coming out here. It is just past 2 p.m. The market is reacting poorly to the news. We are selling off, trading down to new lows. A little bit of a wick forming here on this candle right now as I speak, but this announcement literally just came out just a couple minutes ago, so we're still seeing a lot of volatility. But bottom line is we did see a negative reaction here on this number. So let's go ahead and hop into Discover, and let's look at a scenario here where heading into the end of the session, we are seeing some weakness. So I'm going to go ahead and set this up 3 p.m. Eastern time. It's set up as a long. The exit will be set to the end of the session here, 4:15 p.m. Eastern time. And the post-open filters, I'm going to describe this action saying that we are trading below the open. By coming to the intraday close versus intraday range, say we are below the open, and we're also below yesterday's close. So below the open and below yesterday's low, or below yesterday's close here. And lastly, let's put us in a bullish market environment above a 10, above a 200-day simple moving average to describe all of the price action here before going into the market events section and saying today is the day of the FOMC announcement. So let me hit equals here next to FOMC announcement. I have just described the price action as being a red daily candlestick that is forming, and it is trading below the prior session closing price as of 3 p.m. Eastern time. And now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at the close 4:15 p.m. Eastern time, when it is the FOMC announcement day in a bull market, and you are trading below the open and below the prior session closing price. Those prices are both pretty close to each other since the gaps were pretty minimal this morning. So looking at this, we have 26 samples historically dating back to 2003 for the S&P. We've got 27 for the NASDAQ, 23 for the Dow, and 28 for the Russell. If we look at the win rates on these, they are all weak. You've got the S&P coming in at 35% of these have closed above that 3 p.m. price when this pattern is true. For the NASDAQ, it's 37. For the Dow, it's 43. And for the Russell, it is 36. So all of those fairly weak win rates. Average win, average loss is showing that the average loss is larger than the average win in all four instruments. The NASDAQ's pretty similar in size, but technically the average loss is larger than all of them. Quite a bit larger in the S&P than the average win. For the NASDAQ, like I said, just a little bit larger there. It's quite a bit larger in the Dow for the average loss compared to the average win, and that's the case for the Russell as well. So historically speaking, this pattern where you're trading below the open and below the prior session closing price on the FOMC announcement day at 3 p.m. has typically led to more downside, and that's taken place in a bullish market environment like we're currently in. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.